Okay, good afternoon, future Forex millionaire traders. So, what I'm going to pretty much speak to you guys about today and now is how to catch the big moves. Everyone sees this annoying consolidation up, down, up, down, up, down, up, down, up, down, and you get stuck in there and you get whipsawed out and you trade emotionally. And what you really want is these big moves. And there, that big move down. And that sharp move down. You don't really want to get involved over here at all this mess. So what I'm going to show you guys is how to understand the psychology behind price action. So it's not just candle shapes. It's a whole collection of them. So what I predicted there, I had my entry over there, just a few pips above that previous high, my stop above the main big high with some decent space size over there. And I said indicating a strong move down. So I didn't just say it's going to get down there. I expected it to have a fast, impulsive move down. My impulsive moves are like these moves over there. There's an impulsive move. There's an impulsive move down. There's an impulsive move down. So the big moves is the things that I want to catch here, and I'm going to explain to you guys how to do it. So as you can see over here, we're in an uptrend, right? Up, high highs, high lows, etc. Got an impulsive move here, which is generally the direction of the trend. Not always, because it can impulse one way and straight the other way. But a trend direction is confirmed when the impulse has been made, and then there's a correction over there afterwards before the next up move comes. Now, if the next up move is not that strong and it's starting to kind of correct a little bit and you're not sure and it could go a bit up, it could show signs of an entire large trend being reversed and turned around. So what we have here is a strong first bear candle. So that says now this uptrend, the bears are finally starting to get brave and get back in the action. Generally what the beginner trader would think is, oh no, hop in now because I don't want to miss the bus, and they see that candle and they trade emotionally. So they either hop in there and they chase, or they at least kind of correct and they would be patient enough for a little bit of a fib pullback. I don't know if it's 61% and enter maybe over there, and they'd put their stops above there. And guess what happens? The market blasts up, gets their stops perfectly before it rolls over. But you mustn't get into the trend reversal too early, you see. The trick is to wait for the market manipulation to happen and to confirm to you, now the tricks have been played in the past. Now where can tricks be played to in the future? So where tricks were played in the past, you must look for the price action tricks to be played again in the future. There they are. So if you understand the psychology behind this, it's pretty amazing actually, and simple and cool. So what we got here is our line, our manipulation line, okay, which was on my entry. We had the impulsive move down, we had a corrective move back right to my entry, and we're on the 4-hour chart over here. So a move down to there is about 350 pips, which is a big one. At the $10 a pip, that is $3,500. If I could just hold on a sec, take this draw out, push play, and look what happened. Boom. Absolutely blasted down to the first target and couldn't hold until the outer trend line as well. So okay, so we got that all sorted. Now I'm going to take this all off and I'm going to go to a chart which we can work on. Over here, let's just exit all of this quickly. Okay, I just exited that. Now if I just swap over to the actual editing. So here is the chart with all the lines pulled away, so you guys can have a clear view of what's going on over here. So as I explained to you then, now go to the 4-hour chart, right? zoom in a bit to where this manipulation happened and why it happened and how to understand the psychology behind this. I'm just going to grab my drawing tool. So uptrend, and then the momentum starts to, it's dying out a bit. It's dying out, which is what we call a trend reversal. I drew that a bit skew, but yeah, over there, okay? So there's a trend reversal pattern which it breaks out of, forms a correction, and blasts back down. So to understand the whole psychology behind this and why it works and how you guys get manipulated and fooled out of it. So we are taught what? We are taught that in an uptrend it's high highs, high lows, high highs, high lows, etc. So, but we're not taught to read structure and understand the actual true price action. So here what you would call is still, uptrend, but we've got an impulsive move down which broke those lows over there, okay? So see that? And now people think, okay, hop in there, I'm going to sell there. And they sell, it goes in their way. It goes their way and they get happy. They put a stop above their high and hits their stop. Then it blasts back down. And now they think, oh, wait, now it's still going down. I'm going to hop in again. They hop in again and it's going in their way a bit. And they might even add to their position because they think it's the new downtrend. Put the stop above there and stop gets blasted. Now they are very confused. What's going on? What's going on? What's going on? So now they see, okay, what is this? This is higher highs and higher lows, right? Higher highs, higher lows. Okay, it's an uptrend. I'm going to buy now. So they will find a buy. Oh, oopsie, let's go back a bit. Hold on a sec. So the guys would go and that would find an opportunity to buy, probably put a buy entry above there, and or the guys could buy here either way with a pullback, expecting the big trend to still carry on, and up it goes, hits those guys there for their buy entry, thinking yes, they're gonna go, and boom, blast down. That's what is the manipulation, and understand the psychology behind this whole thing. Because for a big move such as that, the banks need the other side of their order to be filled. And they can't do that if it's easy and predictable. They need to manipulate and fool the 90% of the people who fail in trading to take the other side of their positions. Okay. Okay, so as well, if you dig deep into this, you can see a pattern of mine, which is my favorite pattern. One of them, it's called the Quasimodo, and it's pretty much like this: uptrend, correction down, new high, low, correction up, and off it goes down. Okay, that is the Quasimodo shape. It's pretty much a head and shoulders, but it's not just in head and shoulders because there's actual price action talking to you. It's impulsive move, it's corrective move. It's corrective move, it's impulsive move. So it explains it to you. So if I were to find it over here, I would say to there. Then it starts kind of not the greatest there, but then it goes up, then it comes down. Here's where it's perfect. Okay. Right into where tricks were played in the past, look for tricks to be played in the future, and these are all tricks here. It's not an uptrend, it's a correction. Okay, it's the start of a big downtrend. So we got that going over there, guys. Hope you enjoyed, hope I helped you out a bit. If you're keen, subscribe. If you learned a few things over here, hit the like to help share this stuff, and I'm going to start doing these weekly updates and week predictions for the market as well. So if you're keen, I'll keep you guys in the loop and I'll show you a few more of the hidden tricks and the market manipulation and a few of my other favorite patterns. So here we go, guys. Hope you guys hit a bit of a score here. I'll just quickly see if there's anything else we can quickly speak about. Let's see this. My other trade I put in here was the USD Canada, which is also the 4-hour. I had this same kind of vibe over here. As you can see, we've got a impulsive move down. Now, it was a bit of a tricky correction. It was in there, but as the leaders in the FX industry say, and I quote from Mr. Warren Buffett, he said, "The volatility increases before the trend direction changes." That's a quote from Mr. Buffett. And this is increased volatility. Okay, so here we have nice impulsive move, correction, impulsive move, correction. Now it's not really impulsing anymore. Now it's creeping up a little bit, and I tried. Now, poof, big bears are in the game. Now we got our other guys who think, oh, it's still going to go up, and the bears and the bulls are having a bit of a fight, but you can see this is actually a corrective pattern forming. So here we go over here. I've got 2 entries there of my size, but I have my stop above there, and my other stop on a tight one with a big size lot was above that last pin. There's deeper reasons why I did that. I'm not going to get into it now, but hit play, and if we go like this and I hit play, hold on, I'm actually going to just pull the stuff all off and then hit play. Boom, smashed to first target very easily. Now it's gone all the way down and it's dropped like, I don't know, 500 pips or so. This is also a 4-hour chart. So yeah, guys, I will keep you guys in the loop, and hopefully you enjoyed. Hopefully I can keep you guys around and teach you some more stuff and tricks, and we grow together. And we watched this challenge of me getting my Nissan GTR by the age of 28 all done and dusted, and Lamborghini eventually one day as well. We'll see what happens. Sweet guys, peace out, have a good one. Cheers.